Okay, everybody, we have some breaking crypto news to talk about. The US inflation data has been announced this morning. And what was the first reaction of Bitcoin and the dollar? What are stocks doing? So, this is more about kind of the macro environment. Of course, crypto is impacted by all of this data and what we see from the feds in terms of their decision making. So, did want to make this important video for you guys this morning, first thing out this morning, because we just got the data. We're going to break it down, talk a little bit about what some of the experts are saying in terms of the forecast for later this year and what it could mean for crypto. As we've seen lately, crypto has been running up regardless of any of the policy changes. And I think more and more people, I was listening to a Twitter space this morning. Just want to tell this quick little anecdotal story here before we get into this article. I think a lot of people, and we'll call them the normies, right? The normal people who usually wouldn't even look at crypto, right? Traditional finance people, people who are investing strictly in the stock market, who still think or maybe have this inclination that crypto's silly and whatever. I was listening to a Twitter space, though. More and more of those people are jumping over the fence. They're jumping on the other side of the fence, looking at crypto as a way to hedge against this current system that is put in place, a hedge against the dollar. As we know, inflation has been running rampant and will continue to run rampant. It's been happening since we went off the gold standard in the 1970s. They just keep printing more of it. Like there's no way to solve this issue unless they stop the money printing and create, scarcity within the dollar. But I don't think that's going to happen. So more and more people are basically picking Bitcoin over gold, especially the younger folks, right? I'm 34 now. People my age and younger, they're not investing in gold. But even the people in their 40s and 50s now who want a way to store their wealth, they're starting to look at Bitcoin as an alternative, as a better alternative than gold. And I think that's a big shift. That's a big thing that's happening. And, we look at Bitcoin today in terms of its market cap, sitting at around $1.5 trillion. Gold is right around 10 trillion. So we're still a ways away, but they also understand the potential here for Bitcoin to be much bigger. Imagine if we get up to gold's market cap where we would be. I mean, you're looking at a $400,000 to $500,000 Bitcoin price. Might sound outlandish, might sound crazy, but remember, when we talk about Bitcoin, we have two things helping us significantly. We have a supply demand. People want more of it, and that is increasing. It's increased every single year since I've been in the industry, since I've been learning about Bitcoin since 2020. So we have that, but we also have a supply shock. So we have a demand shock and a supply shock happening at the same time. And of course, we have the halving coming up next week. Now, how does this all make sense with the inflation data? So let's dive into it. With a rally, Bitcoin surpassed its previous all-time high yesterday, rose above $72,000, still sitting comfortably over 72,000, actually up a little bit now on the day. Started the day red and has turned a little bit green. But CPI data is out, and we were expected the CPI price index monthly was announced at 0.4%. That was the expected number. The consumer price index annual was announced at 3.2%. We expected 3.1%. So the consumer price index, obviously very crucial variable to look at and helps us measure various changes in consumer purchasing trends and overall just US inflation. So it was a little higher than expected. This means a positive/bull market for USD, which usually means tapering down of other assets. So as USD goes up, the dollar, other assets usually come down, especially alternative assets. But so far, we're not witnessing that because we have the great equalizer, right? We have the great equalizer, and that's Bitcoin ETFs. And that has just shot demand through the roof for Bitcoin. Institutional money is pouring in. We have the data. We look at it every single day. Billions and billions and billions of dollars. And it's, again, a lot more of these quote-unquote normies and institutions who are now looking at Bitcoin as a viable asset class to invest in. That is a big shift that's happening. from this cycle to last cycle. Now, I want to get into this article too from USA Today, give you guys a little bit more deeper insight into inflation data from the CPI report and what it means for the Fed as well. Okay. So apparently they're talking about rising gasoline cost, keeping inflation elevated in February. I'm not seeing that where I am in the United States personally, but this could be happening in bigger cities and things like that. I'm personally not seeing it. I kind of, you know, I think everybody does kind of track that in their head. They kind of know where rough estimates of prices are and things like that. I'm not seeing the gas hikes yet. Maybe they're coming. I don't know, but this is what the report is saying. Gasoline cost kept inflation elevated in February, underscoring that a return to more modest consumer price increases follow a pandemic-induced spike may continue to be bumpy here. The climb in fuel cost and rent offset flat food prices. So food prices have remained pretty flat month over month, although they're still up. It is ridiculous going to the grocery store and trying to feed a family, let's say, of 4 or 5. I mean, it's got to be absolutely insane, just given what prices are. But those have remained steady here in the last month. Overall, prices rose 3.2% from a year earlier, up from 3.1 in January. And this is according to the Labor Department's Consumer Price Index. How much you believe these numbers? Well, that's on you too. But on a monthly basis, cost increased 0.4% following a 0.3% gain the previous month. How is the core inflation rate right now? Well, core prices, which take out food and energy items, which are very volatile items. So our core CPI is actually our number we look at closer, especially from a financial standpoint, from like stocks and crypto and real estate investing. We like to exclude food and energy because those are so volatile. So we look at core prices, which are also more watched by the Federal Reserve, increased 0.4% after a very similar rise in January. So that remained pretty flat. Okay, it's still lowered the annual increase from 3.9 to 3.8%, but it was the smallest since 2021. So, what are happening to inflation rates since hitting that 40-year high of 9.1%? That was back in June of 2022. 40-year high. It just hit it back in June 2022. Inflation has slowed down substantially for now. But after swift progress in the fall, price increases have become more volatile. And there are still a lot of people, experts, people who know about this stuff way more than I do. And I listen to all different sides of the coin here that are still saying we are getting ready for a double top. What does that mean? Well, inflation topped out at 9.1% in June. It's come all the way back down, but it's not going lower. It's not getting down to where they want it to, which is 2%. Instead, it's starting to slowly rise a little bit. They believe this could be a double top where we're going to go back up to those high marks that we hit in June 2022, where the Fed would then have to start cutting rates again. We'll see. Nobody knows, right? But I think the important point here is what is this going to do to Bitcoin particularly? And I think it's interesting because on one hand, it's kind of good for Bitcoin because it's an alternative asset class. Bitcoin's not so much tied to traditional macro environments. It's more about being a hedge. It's more about, I think Bitcoin at the end of the day wants to be a hedge against inflation. So if inflation were to start to tick back up, and we have the ETFs now, and we have the institutional demand, and we have the Bitcoin halving, I think it could be a positive for Bitcoin. Now, what sucks is people that don't have a lot of money, as always, they're being hurt the hardest. They're being hit the hardest and hurt the most. And it's the people with money that are looking and going to turn to Bitcoin as an alternative asset class to store their wealth, as they did with gold for many decades. It's just shifting. It's just changing. And Bitcoin is becoming, quote unquote, that safe haven asset. It might not feel like that because it's still so volatile, but that's just how early we are to Bitcoin. That's just how early we are to this asset class. And it's going to trickle down into these other assets. I'm even hearing people who, would laugh at the idea of investing in Bitcoin a couple of years ago that are now like going heavy into Bitcoin, Ethereum, and some of the other top layer ones. I heard this on some Twitter spaces just recently. And I think that identifies a big shift. If you are somebody out there, on the retail side of things, I think as much as you can, save as much as you can. And when I say save, I really mean invest. invest as much as you can into both crypto, stocks, real estate, etc. right now, because if and when inflation does heat back up, I think crypto could actually be a place where a lot of people turn. And obviously, the opportunities there to make really nice returns. We know what happens in crypto. It's crazy the amount of returns that you could potentially see. So if we scroll on down here, there are a few more things I wanted to get into. They do talk about gas prices climbing. Will food prices go down in 2024? They're staying relatively flat right now, but restaurant bills inched up only 0.1%. Eggs priced up 5.8%. So food, I think, is still kind of an outlier that I think could move up again, especially if we've bottomed out on the inflation curve for now. Even if we start to come back up a little bit, I just want to see them slowly have to, these rates slowly come up and not go back up to where they were in June 2022. But we're going to continue to kind of listen in and take as much information in as we can. I don't think, in my opinion, that the Fed will allow rates to get or allow inflation to get as bad as it was. They're going to probably step in if they have to, especially in an election year. But for crypto, I really do think it's kind of an outlier here. For a while there, crypto kind of followed the macro. I think it's starting to decouple a little bit and move on its own. And that's one thing we're going to be watching very closely too further on into this year. So I appreciate you guys for watching the video. Hopefully you learned something. Hopefully you got some value. If you did, let me know by hitting the like button and dropping a comment down below. Appreciate you guys. Check out all the links that I've got for you. You might be open to a few things down there, whether it's my NordVPN link or my Patreon. Of course, we have alpha that I send out to my private community members every month. We've got great conversations happening in the Discord. Become a Patreon member today. Link down below in the description for that. And of course, we've got our trading indicator to help you make better decisions when trading crypto or stocks. And that link is down there too to XT Algo. We'll see you in the next video.